Welcome back, everybody. So today we are going to be talking about markets, economics, and everything else in between. Now, I am fully aware that this setup is not the best again. I mean, I'm still having a lot of issues with the house what I'm in terms of electrical, Wi-Fi, such is life, right? So I just thought I would kind of come on and just give you some perspective in terms of how I am assessing the current markets. Now, if you are new here, thank you very much for commenting, liking, subscribing, and obviously watching to the end of the video. YouTube really, really likes that. I know a lot of people say it, but I genuinely mean it. I'm having a lot of issues on Instagram at the moment in terms of reach, and they've switched that button again. So it's one of them things. I'll kind of put screenshots on the screen so you can kind of see what I'm talking about. But obviously, if you are on YouTube, thank you very much for being here. I do reply to every single comment. I do read every single comment. If there's not a bad comment, there's not a good comment or anything like that. So please just let me know how you are thinking and how you are digesting this current market setup. So if you are new here, I would massively encourage you to read my posts just in regards to what I think is currently going on in regards to the US and China and tariffs. Now, I have done a post what kind of explains how the US is kind of organising a work party, and obviously they've gone out on a night out. They've done a free round of drinks. Everyone's had a great time, and now everyone is trying to decide who do we go home with in terms of who is going to be the driver, meaning who is going to be the next global leader. And the booze and the drinking is all in relation to liquidity and money. Now, obviously, as you can probably imagine, if you are in a certain friend group, there's certain friends who can't drink wine, can't drink whiskey, etc., etc. So, so that is what is currently going on. So in this video, I'm just going to obviously just share my thoughts, obviously in terms of how I'm assessing things. And a lot of people have been requesting that I would do a longer video, so this is going to be that video. So how I am currently assessing things is I think a lot of people really cannot see past the word Trump. They can't see past the word like Biden or the color. So, as soon as you mention red, or as soon as you mention blue, or as soon as you mention Trump or whatever, like people do not have the ability to be able to think deeper than that surface level headline. And rightly so, right? I mean, if you think about the type of society what we currently live in regards to quick information in terms of how we consume content, it's 5-second reels, it's 10-second reels. I mean, even some of the things what I'm currently sharing at the moment, a lot of people keep saying TLDR. Just break this down into 5-second snippets. And I think this is just where we are from a society point of view, where everything just needs to be in bite-sized pieces of content. And I think a lot of people really struggle in terms of having a deeper understanding of these very large macro events. Now, I truly do believe that this is probably going to be one of the biggest financial events in the next 50 to 100 years, because we are basically asking the rest of the world, who do you trust with our money? Like, is it the US or is it China? And the thing is, I'm having these debates at the moment with obviously a few people who I know where I'm currently living. And everyone is so divided. Everyone's like, oh, China has this, A, B, C, X, Y, and Z. US has this, A, B, C, X, Y, and Z. And I understand that. But who do you trust with your money? And that is what is going to be forced upon a lot of these nations. And a lot of people are not really willing to answer it. But that answer will come sooner or later, I believe. And you can see this in the bond market on the long end. And just on the bond market as well, there's a lot of misconception just in relation to retail, because a lot of retail traders and a lot of retail investors, they all assume that the Fed cutting rates is a good thing. And I just want to explain why the Fed cutting rates is a bad thing. Because now, if you cut rates, you are only really affecting the short end of the yield curve. You don't really have any influence of the long end. Now, obviously, if there is countries who do not believe that you are fiscally responsible, they will obviously sell your underlying debt, what will ultimately reduce the bonds and make the yield spike. So at the moment, we're seeing that to play out. Now, there's a lot of people who are kind of saying my thesis was originally wrong, and I kind of understand it, because I was kind of anticipating the stock market to come down and everybody to run back into US Treasuries, because the US has about $36 trillion in debt, of which 40% of that debt needs to be rolled over onto new rates in the next couple of weeks and months. Cannot be rolling over that debt onto new rates. What is about 4.5%. So they need them yields to come down. Now, so I was anticipating that they are playing 4D chess and that they are purposely trying to reduce asset prices, because reducing asset prices will close the gap in terms of inequality. But also as well, it will allow people to rush back into the bond market, what will ultimately, again, make bonds go up and make the yields come down. But I didn't really realize what they are currently doing, they are trying to force the conversation upon the rest of the world and every single country. What basically, who do you want to be the leader in the next 100 years? And they are forcing that decision in the bond market. And as a result, you can pretty much see that China are defending the yuan. And you can see this in the CNY and CNH spread. So when that spread starts to break out, they basically need to sell some of their assets to kind of close the gap. They don't want a strong currency because that will massively hurt their exports. So what they do is that they sell treasury bills. So what you can typically see in terms of price action. So China sells the bonds. That means that the bond price goes down, the yields start to spike, and the DXY, meaning the dollar, goes down. The reason why that is because you are going from US treasury bills to US dollars back to the Chinese yuan to obviously prop up their markets and make sure that they are defending their peg to the US dollar. So that peg at the moment is 7.35. So soon as the, let's say, Chinese yuan starts to break out or starts to, let's say, strengthen against the US dollar, they do start to sell treasury bills. Now, something else to consider, I've been talking about this for a past number of weeks and months, is that China holds a significant amount of gold. And I'll put that on the screen now so you can kind of see it. But the thing is, they have treasury bills as well as gold. So I would anticipate that obviously once they have sold all of US treasury bills, they are probably going to be selling gold to obviously stabilize their internal economy, most importantly their currency. Now, the timing of all of this, I think, is very subjective, and I think it's very, very difficult to kind of pan out. Now, just addressing some comments, what I've obviously recently been receiving, basically saying that Trump is not this clever, he doesn't really know what he's doing, blah, 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 blah. Now, I just want to reiterate that I do really think that this is 5D chess, because they have some people in the administration, and this is not their first rodeo. So if you look at somebody called Scott Bessent, Scott Bessent has a background in hedge funds and currencies and macroeconomics, and he was the lead macroeconomics analyst for Soros fund or something like that. I'll put it on the screen. And basically, he was the guy who led the fund in regards to shorting the British pound in 1992. And again, this is a very similar playbook. They've done this type of move before. They are fully aware on how macroeconomics, finance, currencies, and everything else in between, how it all kind of works. And I think a lot of people are massively underestimating the capabilities of these people, because they have this background and they have a very, very good understanding of, again, like how all of this works. Now, what I want you to do as well is just put yourself in, let's say, Trump's position or in Elon's position, because at the moment, if you remember, in 2017, 2018, 2019, obviously Trump was escalating in regards to tariffs, so they kept putting tariffs up. Then obviously in 2020 we had that thing. What happened? Now, where did that thing originate from? Okay, and obviously what happened as a result of that thing? Basically, the Fed stepped in and they printed a shed load of money. They pushed money out across the entire globe, but obviously saved their entire financial system. But obviously, some could say that it was a very tactical move, and as a result, from, let's say, 2021 all the way onwards, we have seen that Trump has had a lot of, let's say, negativity in terms of what they've tried to do to him in regards to, let's say, prison, in terms of lawsuits, in terms of, the ultimate thing as well. So there's a lot of things in there, and you've just got to put yourself in Trump's position in terms of how would he be assessing and how would he be thinking about what is currently going on. Now, from an Elon perspective, just think about reputational damage, what Elon is currently doing, and why would he be doing that? And I think a lot of it is coming down to freedom of speech and everything else, in terms of like what is the core value in terms of the United States, and what does everybody kind of stand for? And again, that question is being fought out in the bond market. And again, a lot of people are not paying attention to this, and they just see the surface level headlines, and they don't see through all of the noise, and they are not allowing themselves to dig deeper in terms of what is truly going on. So when you start to break it down even more in relation to China and the US, you can see that China basically has, obviously, BYD, what is an electric car. You can see that they have, obviously, a shed load of gold. You can see that they have very good apps as well, like TikTok and all the rest of it. And from a US perspective, pretty much see that they have Google, Facebook, Instagram, and all the rest of it. Plus, let's say Bitcoin. I mean, Bitcoin, in terms of their principles, in terms of its principles, it's more aligned with the United States in terms of the Constitution and what everything Western values stand for, rather than from a top-down approach, obviously from China. So you can kind of see that we have a significant amount of things to discuss from a social perspective, from an equality perspective, obviously from a markets, and just from overall value. Now, I think the Fed really needs to stay strong, because ultimately they are protecting sovereignty, their identity, and pretty much everything what Western values stand for. And a lot of people really don't see that. When you look at what is happening to Europe at the moment in regards to who are they most aligned with and what is happening inside Europe, you can kind of see that a lot of these countries are more towards China rather than the US. I think they are trying to force that discussion onto a lot of these countries, what is ultimately, okay, well, who do you trust with your money? Do you trust us with your money, or do you trust China? Who do you want to go home with? Who do you trust driving for the next 100 years? And I think tariffs are kind of being packaged as just negotiation talks in regards to the bond market. Again, a lot of retail do not even pay attention to the bond market, and it is probably one of the most fascinating markets in the world, because a lot of sovereign wealth funds, a lot of big money managers all pay attention to the long end of the bond market, and retail has no idea. Retail just sees these headlines and just thinks, oh yeah, the US is losing its footing because the yields are spiking, but no one really asks why are the yields are spiking. They don't even really they don't really even think about it. And this is another thing what I wanted to talk about as well, is because a lot of these, let's say, money managers and hedge funds and all the rest of it, they all say the same thing, because there is safety in numbers. Like in 1990, you basically had this term, what was called nobody gets fired buying IBM. And you can kind of reiterate the same term today, what basically means no one gets fired holding NVIDIA, no one gets fired holding Google, no one gets fired holding Tesla, etc., 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 because there is safety in numbers. You have career risk. What I am saying, I have the ability to say what I'm saying because there is no career risk for me. Whereas if you are one of these institutions and you start to think like how I think, and everybody else doesn't think like how I think, obviously you have a great problem, because ultimately if you are wrong, your reputation and everything else is significantly damaged. But if you are all together, like herd mentality, it's absolutely fine. We're all in the same boat together. Don't worry, boys. It's absolutely fine. I can't believe you did this, blah, 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 blah. Whereas, again, being, let's say, bold and putting your statements and theses out there, you're subject to criticism and everything, and everything else. And this is the thing, and I see this happening as well on YouTube, just in terms of content creator risk, because a lot of content creators, they are basically just regurgitating the news over and over and over again. They get a headline, they make a thumbnail, obviously they create a really interesting title, what then drives traffic, what drives clicks, what ultimately drives ad revenue for the channel, and they really don't, and they typically don't make very large, bold claims. And the reason why they don't do that is because they don't want to risk the channel's credibility in terms of saying something what is ultimately wrong, because ultimately at the end of the day you are going to neglect a lot of subscribers, right? You're going to lose a lot of subscribers if you do not get this thesis correct. Now, obviously the beauty with me is I don't have any of these challenges, because I don't have any career risk. I'm not in finance. I have no financial background. I have no education. I have no formal education. I basically started my business when I was 17, and I've always run my business. Now, a lot of these people in the financial world, they have grown up inside that system. Now, I'll put that system on the screen so you can kind of see, and I have gone through every single layer of this entire system, because my background is in marketing and software development. But what I'm kind of getting at is that they don't really have the ability in terms of thinking differently. They have been told to think in a specific way, and this is how the world works, and this is how it currently, and this is how the world works, and this is what we do. Whereas I have the ability to be able to think very, very differently, and I think that's what gives me an edge. And also with my marketing and software background, I also think that gives me a significant edge as well, because I am looking at search terms on Google in relation to how people are currently searching for specific discretionary spending. I'll put some of these terms on the actual screen so you can kind of see what I'm talking about. But I have the ability to be able to tap into these different types of markets, because we are currently managing about £500,000 every single month on Google and Instagram and Facebook. And we can see impressions, clicks, etc., for different client accounts, and we can kind of see how them industries are doing. And obviously, as a result, I am taking that information and I'm kind of assessing, okay, well, where is the global economy at? And as well, I am trying to break down in relation to, okay, well, where is the economy at from a marketing perspective? Where is the economy at from a, let's say, consumer's perspective? Blah, 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 blah. They don't really have the ability to be able to think the way I do, and I think that gives me a massive edge. But But rightly so, I'm getting a lot of criticism, basically saying, what's your qualifications, what's this, what's that? I mean, I've had that thrown at me all my life, right? And I feel at the moment it's time to kind of obviously speak out about this thesis, because I think I am absolutely correct on it. And obviously, as you can probably imagine, a lot of people are in denial about it, but I'm trying to ask, what would you do in relation to dropping the yields, reducing inequality, making manufacturing and AI and everything else in the US? How would you do that? How would you do that? Because ultimately, if the trend continues, China is going to be the global superpower, and the US is going to move in. Now, the US is going to move into a sovereign debt default crisis, what ultimately is much worse than bringing the stock market down, because you have so many other different types of implications in regards to a sovereign debt crisis, what a lot of people don't even pay attention to. So I think the US is going to do this, and to be honest with you, I find it incredibly emotional, because when I'm actually looking at the numbers and I'm seeing where the money flows are currently going and everything like that, I mean, I really do think this is all about identity. This is all about sovereign values. This is all about the United States and China. It's forcing that question: what is ultimately, who do you trust with your money, and who do you want managing the world going forward? And I cannot believe that they are about to risk their entire reputation by basically bringing the entire stock market down, and obviously making everybody go back into US bonds, what ultimately allows them to refinance 40% of the national debt. And they then have the ability to basically build the manufacturing and everything else in the United States. But at the same time, they are flushing the market with oil, what basically suffocates the other competitor, what obviously is Russia, and they cannot necessarily fund any escalations. And I just think that this is so incredibly genius and so incredibly smart. Now, in my previous videos, I'll kind of put them on the screen, but I'm kind of talking about how Bitcoin and how stable coins can kind of be used in relation to helping out the governments going forward, the United States government going forward, just in relation to stable coins, because they have the ability to be able to buy US treasuries, what will massively help reduce the yields, because they'll be able to distribute the United States dollar, obviously very, very frictionless across the world, basically instantly. And obviously the implications of Bitcoin as well. I think Bitcoin has so many better properties. I think Bitcoin has so many different types of properties compared to gold. Well, again, a lot of people don't really understand or really pay attention to. But again, that's where the opportunity is. Like, somebody not having the understanding is what generates the opportunity. If everybody thought the same, there wouldn't be any opportunity. If everyone just said, oh yeah, Bitcoin's great, and everyone thinks Bitcoin is great, or everyone thinks gold is great, obviously that gets priced into the asset. And again, at the moment, we are currently in this period where we've got a lot of headlines, we've got a lot of news, there's a lot of noise. Nobody has any idea what is going on. And we're all negative towards each other. I can see it in the comments. Everyone's just saying, well, you're obviously a Trump supporter, well, you're obviously a Democrat, you're obviously this and you're obviously that. I mean, when you think about where we are from a society point of view, and where from an asset perspective, a lot of young people, they cannot get onto the property ladder because they don't have enough money. The money is too expensive. The money is ultimately broken. And when you think about all the different types of, let's say, social issues, what we currently have, where people don't even know their own identity or anything like this, there's a lot of things what are currently broken at the moment. And I really do think that the world really does need to heal. And a lot of people are really not paying attention to what is going on in the bond market. And I just find it incredibly emotional, because we are really going to be doing this. And I've asked so many different people on it, and people just keep arguing about US has this, China has this, blah, 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 blah. And I keep coming back to that question. Who do you trust? Who do you trust? Who do you want to rule the world for the next 100 years? Is it going to be China or the US? Because that is ultimately the question. And we are seeing it, like I said, play out in the bond market. And again, people don't even want to answer that question. They just keep saying blah, 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 blah. They have no plan in regards to bringing equality down, bringing the yields down, or anything like that. And I ultimately think that this is the way to do it, through force, through tariffs, because I think what is going to play out is that China is going to liquidate all of their US Treasury bills. They are going to stabilize their own internal economy by basically selling gold. And as a result, as that gold starts to get sold, obviously I'm assuming that the price of gold will go down. But again, a lot of retail are buying gold because they are seeing yields spike. And they think yields are spiking because no one trusts the US, but they are not looking at what is happening in the sovereign debt market, what is happening in credit markets, what is happening in the long end of the bond market. No one pays attention there because retail does not pay attention there. Retail trades the open and hedge funds and institutions trade the close, and that is pretty much what goes on. I see it every time. Like when the market is green, my comments on my analysis, everyone's saying, how's this played out? How's that played out? How's this played out? And then before market closes, the market is obviously fading. And again, I don't get any comments, and I can see it in the comments. I can see the reactions. I can see absolutely everything. So again, I am using my understanding of markets. I'm using my understanding of marketing, of software development, and everything else in between, pretty much everything else in between, to kind of get a good understanding of what is truly going on. Now, I also want to touch on something what I find very, very, very fascinating is that David Sachs, he is the advisor in the White House for crypto, blah, 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 blah. He does the All In podcast with Chamath, with Freeberg, with Jason. It's a very, very interesting podcast. I would definitely recommend that you go and check that out. But what I'm getting at is that David Sachs says you should read these 4 books. And these 4 books, I've already read these 4 books. And again, it all makes sense. He's basically leaving the tea leaves on the table for people that if they have the time to obviously research what is going on, you can kind of see what type of playbook they are trying to do. And Elon as well posted a tweet yesterday, like 3 hours ago, 4 hours ago, or whatever it was. Again, I'm on a different time zone to the US, but I operate on US time zone. So it's like a couple of hours ago, basically. But he was basically saying you need to read this book. And again, that book I have read before, and it's basically all talking about this entire playbook in relation to fiscal dominance and figuring out who do you want to basically control the world for the next 100 years. And again, short-term volatility I think is absolutely fine. And I've been doing a lot of these comments, obviously down below, just in relation to try and really explain this to people, where it's kind of like when you was a kid and you wanted to go to the dentist, you didn't really look forward to going to the dentist. You didn't want to go. Like, no one really wants to go to the dentist, right? But you know getting the fill-in is going to stop a lot of larger problems in the future. And that is ultimately what they are trying to do, because that problem in the future is a sovereign debt crisis. What is absolutely insane that the US would put themselves in that position. And I don't think there's any other option but to bring asset prices down, obviously make China liquidate their treasuries and gold, and obviously flood the entire market with oil, because you basically suffocate your 2 biggest enemies, what is China and Russia. And as a result, then when obviously everyone trusts you with their money, you can then build America better with obviously manufacturing, with AI, with crypto, with everything else. I'm just trying to put myself in their position to really digest, is this really happening? And I can't see any other option. And obviously I'm trying to get feedback online, and the posts what I've been posting have got nearly 16 million views. Obviously, as you can probably imagine, I've had some very, very highly connected people contact me just in relation to what I've been posting. I've had a few people from Goldman Sachs as well message me saying, we need to talk. And it's like, the guy makes the coffees, right? And I understand, again, it goes back to that whole thing of like career risk. And it's kind of like, because you're on a certain level in a certain bank or whatever, it's dog eat dog. Believe it or not, that's what it is. And you have to keep bringing stuff to the table in terms of ideas, in terms of trades, because when you start to do that, if them trades start to obviously play out, you get a promotion, you get a bonus, etc., etc. And the thing is, I don't really have any. It's not necessarily saying that I don't have any problem with talking with Goldman Sachs or anything like this, but the thing is, the people who feel that because they have Goldman Sachs attached to their name, and it says whatever, that I'm going to like really engage in a full hour conversation in terms of digesting my positioning, obviously what certain signals I'm currently looking at, because I'm fully aware that these people have careers. These people want to obviously leverage their own careers, and I'm not necessarily going to put it on a plate for them just for free. And that is just, and it's just as simple as that, because, and again, I am not necessarily saying what I am saying is correct. It's just purely a thesis. But I'm trying to get feedback, and the feedback what I am receiving is not necessarily addressing the main core issues. A lot of people are very emotional just in regards to when I post Trump and genius and, saying the administration knows what they're doing. A lot of people can't see past the color or the headline, and they get very emotional in terms of their responses, but they don't necessarily tell me any solutions in regards to addressing the yields or anything like that. So Again, I'm just trying to make sure that my thesis is obviously correct, and I really do think that this thesis is correct. And obviously, if you think any differently to that, please let me know in the comments down below. And as well, it's like the UK as well. The UK has a lot of different types of issues going on, and at the moment they're very, very vocal, obviously, in regards to the administration, in regards to Trump, in regards to Elon, and basically everything else. And we've had this guy kind of come up called Gary Economics, Gary Stevenson. And I've talked about Gary before. And the long and short of it is, I think Gary does put out some very, very informative videos, but I truly believe that he doesn't really understand the basis of economics, because he is really just talking about snippets, what really resonates with a guy in the pub, and they really don't understand what currency debasement is, what fiscal dominance is, and the reasons why everybody is, and the reason why the rich are getting richer and the poor are getting poorer is a lot to do with asset ownership, currency debasement. Now, obviously, them proposals in regards to taxing the rich and blah, 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 that does not solve the underlying systemic problems. That is just trying to fix the cause of the problem, not trying to address the actual problem. And again, I mean, I'm having these debates all the time, and because Gary's got such a large following, and obviously some incredibly loyal fans, people don't really listen to it. People really don't listen to my video or anything like that, because they just see the headline, and again, they get emotionally triggered. And you can kind of obviously speculate in regards to why that is, in regards to what apps are they currently consuming content on, and how does that affect your thinking in relation to understanding news, media, etc., etc., etc. And again, I think this whole debate is very, very fascinating, because you are not fixing the underlying problem. You're trying to, ultimately, people are looking for the solution from the same people who caused the problem, and then really not, and they are really not looking at ultimately what is broken. And what is broken is the money, because a lot of people look at things from a lens, what they are very used to. A lot of people look at prices in relation to US dollars. A lot of people look at prices in relation to the pound, to the euro, etc., etc., etc. And they don't really look at things from they don't really look at things from a alternative view, what obviously is pricing things in Bitcoin, pricing things in gold, because what you'll start to see is that the cost of things start to come down rather than going up. And the reason why a lot of things go up is because of the currency, what you're currently measuring it in, is currently getting debased. They are pumping the supply, what artificially increases the price. And a lot of people think that they are getting richer, when ultimately they are debasing the money. And again, people are not even paying attention to it, because they just see prices going up and they don't really assess things from a first principle thinking, just in regards to, okay, well, how many pound coins are in existence? How do they create money? What is fractional reserve banking? What is quantitative easing? What is currency debasement? What is fiscal dominance? Blah, 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 blah. People don't have the time for it. And the reason why they don't have the time for it, because they are consuming content in 5 second intervals, and people don't really care about it. They just want to know the TLDR on this. And this is the thing. Now, this is the reason why I think retail is going to see fiscal dominance, because buying the dip is the only thing what they've ever known. And you can kind of see it in the order flows. You can kind of see it. You can see that a lot of people are taking excess leverage in NASDAQ, in S&P 500, in Bitcoin, in gold, etc., 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 when at the moment everything is based on headlines. Everything gets priced based on headlines and sentiment and emotion. And it is incredibly, incredibly volatile. But I think ultimately this really does need to happen. And I think retail are going to be incredibly, incredibly angry about it. Now, I'll put some interviews on the screen just in relation to Scott Bessent, Ray Dalio, Drunken Miller, in terms of how they are assessing the current situation. And you can really start to understand why Bensent really does want asset prices to come down, because that will give a relief to the bottom 50% of households who do not own anything, who do not own any assets, and they are in a significant amount of debt, and it is required. What basically means that they need to get the yield curves down. And obviously, if that means bringing asset prices down, so be it. And then what I think will happen is that they will start to stimulate with tax cuts, and ultimately, I think they are going to refinance the gold and push it back into the crypto market, what ultimately will help the bottom 50% of people, so they'll feel a lot better. And I think this is going to play out. And again, I'm not really too sure on the timing of it all, but I'm trying to obviously put my thesis out there. I'm trying to get obviously insights in terms of how I'm thinking. And like I was saying to you before, I have no career risk, I have no channel risk, I have nothing to lose and everything to gain by putting this thesis out, because I have basically been studying markets for over the last 10 years. And I made a significant amount of money during COVID, because I had the same feeling in February 2020, where I was like, where I was basically explaining to everybody that this thing is going to happen. And obviously that thing did happen, and I ended up making a lot of money as a result. And I have the same feeling now. And the thing is, I'm a lot more educated than back then, because of obviously all the podcasts, all the books, what I've been reading, etc., etc., etc. I mean, I have been reading so many books. It's unbelievable how many books I've been reading. And this is another thing. A lot of people think a lot of people ask me in regards to investing books, trading books, economics books, etc., etc., etc. The biggest thing when it comes to economics, markets, and trading to understand is emotion. It's the ability to be able to control your own thoughts, feel that emotion, feel that thought, and assess why do you feel like that, and do you need to do anything in relation to that emotion? Because majority of people do not understand, because majority of markets are driven based on emotion. It's the emotion what then drives the action, what ultimately drives markets. So again, you have books called, now I've mentioned these before, but there's a book called The Courage to be Disliked, and that really does help in terms of understanding your mindset, understanding how you visualize things to the world, and how you can kind of deal with certain things being said to you. That really allows you to really stabilize your mind, because this is the thing, retail is very emotional driven. They expect things in 5 seconds. Trump said this during a tweet, what does that mean for assets? And then they'll go and buy that asset, and then Trump will say another thing, and then it'll go down, and then they'll get really emotional. And this is the whole thing, this is the whole idea. You are supposed to be shaking around, because that is what generates liquidity for hedge funds, for sovereign wealth funds, for the big boys in the bond market, etc., etc., etc. And like I'm saying, the giants are fighting in the bond market. Nobody is paying attention to it, because ultimately that's not where they've been told to look. They've been told to look at the headlines, the top 7, buy the dip, etc., etc., etc. And I think everyone's just going to get washed out in this event. And yeah, I mean, when you really start to think about it, who would you prefer to when you actually start to think about it, who would you prefer to be the leader for the next 100 years? Do you prefer China? If you prefer China, buy BYD, buy gold, obviously watch TikTok, etc., etc. If you prefer the US, Instagram, YouTube, Google, Bitcoin, everything what the US stands for, the entire stack from a Chinese perspective is all up in the air at the moment, because because the world is trying to decide who do you want to be the leader in the next 100 years. And again, I think it's a very, very interesting time. And obviously, as you can probably imagine, there is going to be a lot of news and a lot of volatility. Because going back to that analogy, what I was saying to you before in relation to going to the dentist, when your mum said, let's go to the dentist, you didn't really want to go to the dentist. You would try and say certain things to try and get out of it, and I think that's what is going to happen. They are going to use different types of avenues to drive different types of messaging, what ultimately drives action. And I can see, obviously, that being turned up quite a lot if they are forced to liquidate. I mean, when you start to think about how do people consume their news, what type of apps do they use, and all the rest of it, I mean, it's going to get incredibly, incredibly noisy. But if you know where to look in the bond market, and obviously if you know where to look in the bond market as well as in equities, I think it's very, very obvious in regards to positioning and what you should be doing. Now, just on that, I know that this has been a long video. Hopefully you've enjoyed it, right? Just me rambling into a camera, pretty much outside 7-Eleven talking about macroeconomics. But what I can kind of do is I can kind of build a dashboard just in relation to the different types of signals what I am currently paying attention to, and then obviously just share it with everybody if that is of use. Obviously, if that is of use. Now, like I was saying, I'm getting a lot of phone calls and a lot of people, like I was saying to you before, I am getting a lot of messages from people in large institutions, hedge funds, etc., etc., in terms of what I'm currently looking for in terms of stress and all the rest of it. And I've been a little bit reluctant to obviously kind of talk openly about it, because I'm trying to assess, am I right or not? And obviously I am positioned based on my thesis, but I really want people to kind of give me another argument, what ultimately just isn't, Trump can't be this smart, because that doesn't really address the inequality, the yields, etc., etc., etc. So I'm really trying to figure out, is my thesis is correct? But like I was saying, I can kind of put some type of dashboard together, and if I do put some dashboard together, I'll put it in the description box. I haven't created anything as of yet. I have a system on TradingView, what I'm currently using, what can kind of show me stress in the system, stress from a US perspective, stress from a Chinese perspective, and obviously as a result, dependent on them price movements, my portfolio adjusts dependent on that level of stress. Now obviously I can kind of share that. I have no idea in terms of if I'm going to charge for it or not or whatever, but it's all up in the air. I mean, obviously at the moment with what is going on over on IG, just in relation to me keeping quiet, I kind of really want to obviously build on that page, put the money back into that page, grow everything. And yeah, I mean, I'm just trying to figure out how I can kind of do it again, because just to give you some more insight into DC economics on IG, over the last 6 months, obviously, I've been significantly silenced on that page, and I have been spending a significant amount of money to basically build up a audience for for when something like this occurs, because I was anticipating this happening. So I've been building up this audience brick by brick by brick by brick. And now as a result, I have openly talked about it to the world. I've got 15, 16 million impressions. And now, obviously, the page is having a few troubles. But now this is the thing. I truly do believe that this is a massive thing, what is about to happen. And I want to obviously showcase it to the world. And I was in an opportunity to obviously do that, because the page basically became unshadow banned. And now I'm facing the same problems. And I'm thinking, do I spend that level amount of money again on the page and grow it and blah, 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 blah. But again, I kind of want to obviously grow YouTube, because I want to be doing a lot with, like ad revenue and blah, 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 blah. Because I do spend a hell of a lot of time, obviously, on this, on DC Economics, sharing everything, sharing my passion with everybody. And I do run a few other different businesses. And as you can probably imagine, it's like riding 12 horses with one ass, with all the comments and all the rest of it. So it is a little bit rocky every now and again. But like I said, I really do enjoy it. Some people follow football, some people follow soccer, whatever you want to call it, or American football or hockey or whatever. And I just follow markets and finance. And I have done that for nearly 10 years plus, easily, read countless books and obviously listened to a lot of podcasts. And this is another thing with the podcast side of things. I've got these very, very, very vocal hedge fund managers and finance guys on Twitter talking about all these issues with tariffs, inflation, GDP, blah, 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 blah. And they just sound like lemons. They cannot see through the noise. And I just do not understand why they are thinking like that, because when I listen to them on a podcast, I've been listening to them, I feel like I properly know them, because I've been listening to them for years and years and years. I've been listening to the All In podcast. The first episode it came out, I was on that, I was listening to that podcast, because I used to follow Jason for a long time, and on Jason as well. Jason is a really lovely guy. He can be very passionate, very emotional about certain, let's say, social events and this type of thing. But again, I listen to these debates, and I think, how can you not see with what is fundamentally going on? And this is the thing, I don't even know if they even do know what is going on. Freeberg is incredibly passionate about the national debt, and I can't see him not seeing how this currently plays out. But again, obviously nobody can really talk about it, right? And there's only me talking about it, who's sat outside 7-Eleven, rambling to a camera, looking like an absolute idiot, right? So, so anyway, hopefully you've enjoyed the content. If you've enjoyed long-form videos like this, please just let me know in the comments. Obviously, if you've got any comments in general, please leave them in the comment section. I will reply to every single one of them. And yeah, this is just a breakdown in terms of how I am assessing the world and how I am currently assessing markets. And like I was saying to you before, 7.35 seems to be the area where China is currently defending. Now, obviously, as a result, what is going to happen to asset prices and all these other different types of asset classes. Now, yeah, if I'm going to post anything in relation to a Excel sheet or anything like that, it will be in the description box. I haven't created anything at the moment, but obviously I'm going to come back to this video and probably leave it in the description box if I do build it. And anyway, to the 4 people who keep on supporting me, I hope you're having a lovely day and take care. Bye-bye.